Hey guys, it's Sasha. Fiverr have just published their results for Q3 2021 before trading opens, and their share price has exploded. It is up 15% in pre-market trading as I'm recording this video. So what is happening with Fiverr stock? Why is it going up so much? And what was in this Q3 report? Well, I am going to go through all the numbers. I'm going to share some really interesting insight and tell you my thoughts. Just so you know, Fiverr is my second biggest position in my personal portfolio, so that may well mean that my views are biased because I am a shareholder. And as always, I am not a financial advisor. This is just my personal view on the numbers. If you do need financial advice, you'll have to go somewhere else. Please go and seek it with a suitably qualified professional. Anyway, let's look at the Q3 results. So here is Fiverr's P&L. And when I looked at it, I had to do a double take. There was a moment when I literally thought that I accidentally copied and pasted last quarter's data by accident. So I actually had to go and look up the last quarterly P&L to compare the two, and here they are. Can you spot the difference? I'll give you a minute. No? Me neither. The results are almost identical to what Fiverr saw last quarter, and that is actually a very good thing. I'm going to explain why in a second. Q3 this year has been super challenging for lots of businesses operating online. Specifically, companies like Pinterest, Facebook, and loads of others have really struggled. And there are reasons for that, because Q3 this year saw the relaxation of restrictions around the world, people doing more travel, going out and about, going back to offices, all of that stuff. And that includes both leisure and work. And Fiverr seems to have consolidated and matched the record numbers that they published in Q2 this year, which on balance of all of this information, given what everyone else has been seeing, is actually pretty good. And the market seems to agree. I do find it hilarious though, that when they published these exact same results just 3 months ago, the market went bananas, completely overreacted, and Fiverr got a 25% drop on their share price. And now that pretty much nothing has changed in terms of these numbers, apparently these numbers are suddenly now pretty good. I talked in a recent video about investing in stocks that jump, and this Fiverr stock is very much one of those. Fiverr is a small company. It is not a very popular topic on YouTube. I haven't heard anyone else talk about it. And it doesn't have a dedicated fan club on Twitter. So nobody really cares much about the stock until, the one day when their earnings show up. And then the analysts go and spend maybe a couple minutes looking at the numbers. They do what they need to do to quickly on the calculator do some multiples. And then we have to wait another 3 months before anything else happens until the next quarterly results. So let's look at some of these numbers in a bit more detail, because there is a secret sauce in here that I am pretty excited by. In the press release that came out alongside the results, Fiverr announced that their outlook for Q4 is pretty much bang on exactly the same as the last 2 quarters. They're saying their revenue is going to be $74.5 to $77.5 million, and they expect all the other results, it seems, to be pretty much a copy and paste again. And that means that year on year, that outlook gives them a 54 to 56% growth in 2021 compared to 2020 on revenue, which is already amazing. The problem though is that if they hit that number in Q4, it will kind of look like they have 3 consecutive quarters of no quarter-on-quarter growth at all. And some analysts might look at that without understanding what's underneath that and sort of be concerned because it looks like there's stagnation. But if you look at my favorite chart in this report, which you can find on page 5, you will actually find some other numbers that would sort of be concerning as well. If you haven't seen it before, this chart shows the revenue generated by each quarterly cohort as a function of the marketing spend that it cost to get that cohort. And you can see that Fiverr makes up the marketing spend every quarter in revenue from the customers that they acquired in that same quarter. That is a phenomenal rate of return. And then any revenue that each of those cohorts generates in subsequent quarters is basically pure gravy on top. And the worrying bit of data that I saw in this report is that in the last 2 quarters, the first quarter's performance of each of those cohorts has been dropping. We're now below visually that 1x mark, although it says on the right that it's still 1x. I'm guessing they're rounding. And that is definitely something to keep an eye on. Now, Q3 last year was also not that high, so it could well be a seasonal issue, but it's definitely something something worth pointing out and something to be aware of. And the other thing that doesn't look particularly good in this report are that these most recent circles for the newer cohorts. If you look at the last quarter available performance figures for Q1 this year and all of last year, the gap from the previous quarter to the most recent one has shrunk, and you can see it. It's very noticeable even on a chart without the numbers being printed. So that sort of indicates that potentially this last quarter we had, Q3 this year, those older, not very old cohorts have not been buying as much on the platform. And that is another one to keep an eye on, because there are reasons that sort of explain it. The stuff we talked about before, the post-COVID reasons, the summer season when people generally don't spend as much on these kind of platforms. They're definitely possible explanations, but we'll have to wait and see how much this bounces back and what that looks like in further quarterly updates. However, there are two really good things in this report as well. The first one's relatively straightforward, and that is the last quarter on the older cohorts is actually continuing to do really well. Those customers that were booked in 2017, 2018 are not slowing down in revenue growth at all. They're much smaller cohorts, but they're doing very well. Those gaps are looking pretty good, pretty consistent, and actually, if you compare the absolute sizes of these steps up from one circle to another, those jumps look very similar to what these recent cohorts have been doing in the same quarter, the latest one available. So that is sort of encouraging as a supporting thesis to what I was saying earlier about being a sort of one-off, temporary, potentially transient issue that is happening right now due to post-COVID that might eventually resolve. And the other really important point is one that you can't actually see directly on this chart. And it is actually a little bit complicated, so let me try and explain it. These cohorts on this chart are not all equal. Over the last few years, Fiverr's marketing budget has been growing quite substantially. In the last 2 quarters, they spent $38 million in marketing to attract those 2 cohorts each. So let's break it down. That means that last quarter, they made a bit under $38 million in revenue from customers that they booked in that quarter. And remember, the total revenue for the quarter was $74 million. So that means that the most recent quarter earned maybe about 45 to 48% of the revenue from the customers that they booked in that quarter. Then the next quarter, marketing spend was also 38 million, remember 1 quarter ago. So it's hard to say exactly, but it looks like that second dot in Q2 maybe is up about 0.35x on the graph. So that's 38 million times 0.35, about 13 million. Now, a quick point. The marketing spend that is being printed in the P&L may well not be exactly the same number that they are using to work out this graph. There might be some numbers that they strip out. It is not 100% clear, but I am not doing a very precise or a very accurate numbers-based thing. In terms of the relative point I'm making, the point will stand regardless of this. Anyway, Q1 this year, marketing spend was 42.6 million, even more than the last quarter and the quarter before that. They had Super Bowl ads during that quarter, so they spent more than usual. And that cohort made about 0.25 times extra on top of what they've already earned. So that's another about $10 to $11 million or so. So the 3 quarters they booked this year generated somewhere in the region of $58 to $60 million out of the $74 million total that the company earned this quarter. And this is the critical bit, because this is where the numbers get really interesting, even if it's a little bit complicated. All right, 1 year ago in Q3 last year, the marketing spend was only $25 million. And the year before that, in Q3 2019, the marketing spend was $15 million. So you can see that these new cohorts are much larger in size. They have acquired a lot more customers by spending a lot more money. So on the chart, the stuff on the left is much bigger than the stuff on the right. And Fiverr is continuing to do the exact same thing they've been doing for quite a while now. They spend all the money possible, all the money coming in, and then some on acquiring new customers. Now just think about what these numbers will look like in Q1 next year, because this is how I'm thinking about it, and this is how these numbers add up. And this is why the sort of stagnation this year is not really stagnation, because of that reinvestment cumulative effect. So we'll probably have more Super Bowl ads and maybe an increase in marketing spend on top of that. So it's pretty likely that we're going to be seeing marketing spend in the region of $45 to $50 million in Q1. And let's say that we revert to the 1x multiplier multiplier as most of the recent quarters have been doing for that first quarter. So we would be en route to collecting about $45 to $50 million in revenue just from those guys, just from the Q1 next year acquisitions. Then the Q4 cohort from this year, the Q4 that we're in right now, will be at that point in its second quarter. And if it does the same as all the old ones before that, we should be looking at somewhere around the 0.4 to 0.5x of the $38 million that they should be spending, because next quarter's numbers are likely to be the same as this quarter's. So that's another $19 million, if you like. Then look at the third circle up on the recent cohorts, maybe another 0.25x or so, maybe 0.3 on there, on another $38 million worth of marketing, which is what they've just spent. So that's another $10 million or so. And the fourth circle up for Q2 this year, that's another $38 million worth of marketing budget, and multiply that by about, 0.2x on the chart, and that's another somewhere like $7 million. So if we add all of that up for Q1 next year, the four most recent cohorts at that point should be adding about $80 to $85 million in revenue. And then you have to add all the other cohorts on top of that, including, Q1 this year that had $42 million worth of customers in it, and so on. This is the non-linear growth that I previously talked about. And this is why I invested in the first place. We're not seeing it in the revenue numbers just yet. But the company is in this very early growth stage where they're reinvesting absolutely everything. As a result, we're not even seeing any profit because they're spending everything on getting these new customers. That then, once they're acquired, they collect revenue that quarter, but then the next quarter, and so on, quarter after quarter. And the more money that the company spends on buying them, the more you then collect back in those subsequent quarters and years. I still see a significant upside on Fiverr. I actually think that potentially this one will be a long-term play because the market, the analysts may not see the impact of how this is working out until maybe, a year, 2 years, 5 years, who knows. I have a relatively complicated model that will probably bore you to death if I try to go through it in a YouTube video. I basically model out these individual cohorts into the future and what that might mean for their P&L at the different points and how much they're going to be spending on marketing, etc. I basically modeled that whole thing out bottom up. But anyway, remember, I am just a random guy on YouTube, so please take this for what it's worth, a random opinion by somebody you don't know, but I am seeing a ridiculously huge upside on Fiverr stock. It looks absolutely stupid in my model because I am seeing something I don't see very often in these kinds of models, a 200% upside on the current share price, and who knows, maybe I'm completely wrong, maybe I am dumb, maybe I got it completely wrong, it's possible. Maybe the market will never catch up to that valuation even if it is accurate, but it's good enough for me, and these latest results are just continuing to support my numbers. If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching, and as always, I'll see you guys later.